Welcome to another CFO Wisdom podcast with Carrie Apel with us today. She is CFO and CPA at Midwest Financial Group. Carrie, can you introduce yourself and tell us about your role at Midwest?
Sure. Again, Carrie Apel. I'm a CPA for about the last 22 years and have been the CFO of my own company at first, and then we merged with Midwest Financial Group. So for about 27 years or so, I've been in the capacity of the CFO world, if you will. And currently am the acting CFO for 3 different companies, as well as doing various tax returns and financial planning at the same time.
Great. And yeah, tell me about the interim CFO roles at these 3 companies and what common challenges do you see in companies on a financial level as someone that sees their numbers on a daily basis?
Certainly. So part of the biggest challenge that I see with the companies that I work with is that their financial systems and their accounting systems are not organized. And unfortunately, as we all know, the cliche phrase of garbage in, garbage out. So effectively, most of the time when I start with these companies, I revamp their entire accounting systems. We look at their records, make sure that the financials actually make sense. And a lot of times they don't. They tell a very poor story, and it's not necessarily the accurate story. So we're wanting to make sure that those financials read like a good book, and then we can move on from there and create systems surrounding their accounting principles a little bit better.
Right. And what size of companies do you work with typically, and in what sector, if there are sectors?
Sure. Generally, it's between 5 and 20 million. And the reason there's a big range is those are the types of companies that can't afford sometimes to have their own internal CFO along with their own accounting departments. So generally, they like to outsource that CFO type role. And then we oversee some of the projections and indicators for them and help them guide principles related to their businesses. And we let their accounting team do the day-to-day work. The industries that I've typically worked in tend to lend themselves towards manufacturing. We have some service-based companies, but most of the companies we work with fall in that manufacturing production type capacity for an industry.
Right. And once the numbers are in place, how do you optimize the profit margins, let's say, and the total revenue? And typically, how long does it take to see your advice in action?
It can take anywhere from a few months to a few years, depending on how receptive the company is and the depth of need that they have. For the accounting records, it generally takes a few months. Part of the reason is at the same time that you're fixing your training. And so to break old habits can be a little bit challenging. And then you're also trying to help the owners understand, or the leadership team understand, the new financials and help them also create something that they can truly tell the story with as well. Then we move into starting to create systems related back to the accounting and how those different departments can interact with their accounting sector a little bit easier. And then that information flow just works better. It stops some of the gaps that we have. And once we start to do that, you start to find some of the skeletons in the closet, if you will. So once some of those skeletons start to jump out at you, you start to fix some of them and you try to stuff them back in the closet and make sure they don't become an issue. And once we have some of those at bay, we then look to the biggest revenue source that the company has. If we see some other issues that might be a more urgent nature, maybe there's an expense issue that's way out of line, we will focus on that for just a bit, and then we'll redirect back to the biggest revenue generation in the company. Make sure that those systems are working appropriately, because that will then aid in cash flow to help fix some of the other issues. So generally, we try to look at an overall our challenge, and if we can start to implement a few things that may fix other issues, that's what we do. So basically a large product with sub-products fixing the overall issue, if that makes sense.
It does. On a cost perspective, how do you identify, typically speaking, if something is just out of line or is not yielding any returns? Is it as simple as taking the time to evaluate all these costs and just clear deduction that this is not working, or is it something more technical, like this employee is costing us 150K a year and is not yielding any return? So how do you go with cost cutting and cost optimization?
So it's a little bit of a layered approach. Initially, we look at the financial statements and say, okay, this seems out of line with this industry. Why are we at such a percentage when normally I've seen something else? Or if I look at the numbers and just maybe it's a categorization issue, we just don't know. So then we start to dive into that. Once you start to ferret out some of those challenges, then you start to dig into the details. You get into the weeds and you start to look at employees. You look at realization rates and what you just said. Are they truly covering their wages? Are they covering their benefits? If they are, great, but we also need them to produce in some way. We have to make money from them. There's no reason to have an employee if they're just status quo. So then you start to dig into some of those reporting metrics and make sure that they're truly benefiting the company and making you money. Where's our strengths? Where's our weaknesses? And again, another cliche, your weakest link is what's going to cause to your company. So we have to get rid of that. We've got to find that issue out and fix that.
On growth perspective, because you can invest most of your resources in what's already yielding, but in markets, it's like a moving target when it comes to increasing revenue and so forth. So how do you make sure to invest enough in new stuff that might potentially yield new and bigger revenue for the business?
You have to be a little bit careful because you have to first make sure that you're doing well with what you're focused in or what your niche is. If you start to get into too many tangents or too many tentacles out there, you start to potentially lose that large market share. So you have to be a little bit careful that those growth opportunities are complementary to what you're doing. And you also have to look at your demographic as well as the potential market share that might be available. The challenge that companies have is a lot of times when, especially if they're bringing in an interim CFO now, and they're already in that either in the growth or in the stable phase of their company, part of the problem is they are overwhelmed. They don't know what to do next. And so they try to regain control of their company and they aren't quite sure how to do that in some cases. So first we try to make sure that everything related to their core product is functioning as well as it can be, because you can find additional revenue, you can reduce expenses, and almost always can do a combination of the both. So then once you get that under control and you've got a great system going, then you can start to explore potentially different opportunities. Now, again, depending on resources that they have available, we might be able to explore those at the same time. But we have to be a little bit careful because once you get the main core business out of control, everything will be out of control. So we want to make sure that it's really stable first, and then we can expend our resources and our energies elsewhere because it's now working like a machine in the core business and creating that cash flow to potentially do some research and development or experiments, those types of things to get into another product line or another service line, those types of things.
Who are the best CEOs out there? Is it someone that can be numbers oriented while maintain a vision and have some sales skills to them and a bit of human skills? Because it seems that CFOs are really structured. Their goal is to keep us on the numbers and have us organized and standardize the processes so that we can forecast results and potentially reach them in an 80% capacity, let's call it that way. So how do you communicate to CEOs and teams that most of the time are a bit less structured? And in your opinion, what is the best kind of CEOs? What skills do they have?
The best kind of CEOs, in my opinion, are those that realize that they don't know it all. And they also then rely on their senior leadership team or external sources, advisors in those capacities to help them. There are very few people that can do everything in a company and do it well. So you really want to hire people that are smarter than you in a lot of cases in order to help elevate your own experience level. Some of the best CEOs that I have seen are those that are confident yet humble, and those that are willing and receptive to try something new. And so it's a test and measure principle. The best are willing to test. You give them a little bit of taste. If they like it, then they can move on. It's hard to work with a CEO that's willing to jump in whole hog without actually doing some sort of testing and measuring, because it may not be the best thing for the overall company or for themselves. So you have to try to work with them, gain their trust, and then be able to move forward. The other part of the CEO and CFO relationship is that CFOs in today's world are becoming more of strategic partners, more so than I would say your numbers. Yes, they have to understand the numbers, but they aren't getting as down and dirty with the numbers as they used to. They're very high level. They're very theory oriented. They're very strategic in their thought process versus literally getting their hands dirty. So working on that combination of conversation, understanding the story, and then working on that future level for the company is really important in that combination between those two strategic leaders.
How do you see the current economic climate? Also, can you tell us like how it changed since COVID? So pre-COVID, when COVID happened, and let's call it post 2021, what have you seen on the economic scale and climate side of things?
With the different industries, I can answer that in a different way. So that becomes a little bit of a challenge. I guess if I try to simplify things a bit across a lot of the industries that I work with, I would say workforce has been a challenge. So trying to gain some efficiencies in our practices or in our industries has been critical. And that's mainly so that you don't have to have additional workforce to do some of the same work. Of course, analytics are getting to be incredibly important so that we can mine data to better successfully run our companies, again, with less people in a lot of cases. It's also then trying to make sure that we are getting the best revenue we can out of the product or service that we have to offer. And again, it all comes down to efficiencies and systems. I don't really think that has been a change since pre-COVID. It certainly started to happen during COVID. Those things were always important. But I think what COVID did is, again, it brought out those skeletons in our closet. When times get tough, all those challenges in companies really start to present themselves because you're trying to grab at every straw in some cases for some industries. So in obviously restaurants were a big challenge, correct, during COVID. They had to eke out every dollar they could, and you were finding every challenge that they ever had in their company because it just presents itself when your revenue isn't as strong. The same then is true in other industries that occur during that time frame. However, if you look at home goods stores, they skyrocketed in revenue. So they probably created some skeletons. And now as things start to come back down a bit slowly, you're probably going to start to find more of those issues again in their companies because growth happens so fast. So when you start to look at a lot of these different challenges that our industries have, in times of growth, things can get a little bit out of control. And once times start to tighten up, that's when you start to have some challenges and you start to figure those things out and why you have to try to stay on top of these things in all economic levels.
On the tax side of things, I mean, I didn't hear anything good about Wisconsin on the tax side, but Nevada, Las Vegas is a good place, Miami, Puerto Rico in the US. So companies can save a whole bunch there. It's like probably one of the lowest hanging fruit on a financial perspective. So what do you advise companies to do on a tax perspective?
Again, it is so company specific, industry specific, as you said, location specific, depending on what they're trying to achieve. There are some definite positives and negatives of having businesses in Wisconsin or even in the United States across the board in general. But the biggest thing is you sometimes emotionally have to decide where you want your business as well and how you're going to tax your business. And it depends on who's part of your business. If you're a family related business, those types of things, that can all change my answer. So I can't really give a solid, strong answer to your question without getting a little bit more in the weeds of who, what, when, why, how, in those types of cases.
So you grew up with entrepreneurial parents and recently merged your firm. How does it feel to be back again part of a team and not so much as, the founder and the CEO that decides upon everything.
I'll admit it's a little bit challenging. In the past, I had 100% say on everything, and now I've got a less say. There's 4 leadership members now versus just the one when I had my own company. I had that final say. When you work with other people, you have to be a little bit more accommodating, and you have to let down your guard a little bit, where in the past you have the ability to kind of charge ahead. And if you make a mistake, it's all your fault. You have to be a little more calculated now when you have various partners. You also have to be able to communicate really well. And that can be a challenge sometimes, especially if you have different styles. And it's a good thing, though. I think we all push ourselves to be better. I think we push ourselves to think a little bit differently than what we have in the past. And maybe some are more compassionate and empathetic than some of us who might be more drivers and keep that business going. So complementary is a word that I think is very important for leadership teams. And I think that's the benefit of what we've gotten in our merger.
You also advise businesses on mergers and acts?
We do. And one of the biggest things that I can say about that is, again, it comes down to having a tremendously strong plan before you do so. That is where I see any kind of merger or any kind of acquisition fail immediately, is when the planning is poor.
And what kind of plan would it look like? Let's say my cold email agency, let's say that we run on 30 clients rostered and churn rate is like 10% on a yearly basis. If I sell that firm to another cold email agent that is bigger, would the plan be a 1-year plan? Because it's kind of hard to plan over that. I mean, we can have objectives, and would it be that I stay for a couple of months to make sure that everything is fine, that I add value in here and there? What kind of precise plan would that be?
Really depends on the person acquiring you and what their opportunities and goals are for your company. One of the biggest challenges that I see is when they do bring in the prior management of the other company and they haven't laid out expectations. That is critical, because when you go in and you have all these thoughts and ideas and it doesn't match up with the company you're merging with, it creates an enormous amount of frustration and aggravation between both companies. Even though you may have the end goal wanting to be the same, that path to get there could be 2 entirely different ideas. And in my opinion, those things need to be investigated and decided before you ever sign on the bottom line, to make sure that it goes as smooth as possible.
So on what side do I want to be on if I want to make it big? I guess I should be the acquirer, but then it's kind of hard to get a return on investment. On acquiring a business, I guess I need to do it probably 10 to 100 times in my whole lifetime before I fetch a formula that I can reproduce again and again. Is that the right thinking, or can I be successful on strike 3?
You can be successful on try 1, as long as you've really thought things through and you've created a product or a service, a widget that somebody desires. And then it's being able to market that product and making sure that your audience is receptive to it. You see it all the time. Shark Tank on TV, there's things that people don't really have a market for, and all of a sudden they're bursting at the seams because they've had this law of attraction. They've been in front of millions of people from this television show, and it's now known. So getting known is critically important. And then once you're known, can you deliver on the promise that you stated in that delivery method? Those, to me, are the critical pieces. Volume is sales, right? The challenge that you have in service is you've got a billable hour. You have a finite resource. So the only way to grow service is raise your rates, hire more people to take on more work. You're a finite resource in that regard. When you look at a product, though, or a widget, as I call it, you have endless bounty in order to be able to sell that, dependent on your manufacturing facilities, your market channels, those types of things. So when you start to look at a product, in my opinion, for mass volume and ability to make a bottom line net profit faster, bigger, what have you, you're probably looking at a production company. You're not looking at a service-based company.
If I want to start my own business broker agency specializing in international businesses, helping people sell their business and other folks buying it and taking a cut in between, and only going after internet businesses, what do you advise that I do if I got the outreach part settled? Because that's what I do. Reaching out to people, that's the easy part to me. And finding them, well, if I reach out to sellers and I find them buyers, or and vice versa, I think I can scale it quickly. To me, the complex step seems to be the transaction itself, and really making sure that the assets are what they are, the legal part, obviously, to make sure no one is screwed, maybe the guarantee. So I know that you're not into necessarily business brokerage, but what do you think the challenges would be to run such a firm?
Depends on what parts you're going to take responsibility for. If you are just an intermediary to connect the two businesses, you remove yourself from the responsibility of looking at the financials. It's those two parties that have to review the financials, have to look at the business plans and make those decisions. And you literally are just the go-between. So depending on what your contract looks like, it can really depend upon how you're going to develop that model out. I don't ever suggest anyone get into something that they're not comfortable with or that they understand. So if you aren't well versed in financials, for example, don't let that be part of your service. Your service is to be the middleman to connect client A in the United States with client B in Africa. It's not to really do much else for them.
Right, and partner with folks that do have this experience, absorb it, and eventually have this part of the services. Yeah, it could be interesting. I think this market is still well underserved, especially on the internet businesses side of things. For example, marketing agencies, staffing firm, and so forth. I think that's what I would go after. So thank you for the advice you provided today, Carrie. Where can people find out more about you?
They can go to our website. It's mfgteam.com. And all of our contact information is there, phone numbers, emails. If anyone would like to reach out, I'm always happy to have a conversation.